Is carbon counting the best investment? This is Energy Matters with Claire and Dan. So Jeff Eckel, thank you so much for joining us today on Energy Matters with Claire and Dan. Jeff is the former CEO and current chair of the board of Hannon, Armstrong Sustainable Infrastructure Fund. Thanks for joining us today, Jeff.
Oh, thanks for having me.
And we really appreciate getting you on because this is a key time to be doing what you've been doing for a long time. And I guess I would love to have us start with a bit of the origin story of how you and Claire met.
Sure. I had rejoined HASI, would have been around 2000, after getting fired from my job as CEO of EnergyWorks. EnergyWorks was a startup company to do clean energy in India, Indonesia, Brazil, and the US. So a startup company on 4 continents with
It's like the
products.
Brick Plus One or something.
Yeah, it was a really preposterous idea, but I ended up getting fired by Bechtel when they wanted to sell the business for a really high price. I knew it wasn't worth that, and they said, "You're out of here." So I came back to HASI.
I'm sorry to interrupt you, Jeff, but you were at HASI before because, of course, you had a finance background?
No, didn't have a academic background worth anything. 2 degrees in public administration. I learned externality theory and a little bit about thermodynamics along the way. But
what else is there?
Yeah, I'm pretty much into those 2 things. But I had returned to HASI, and Mason introduced Claire and I.
Mason Woolrich.
Mason Woolrich, the chairman of EnergyWorks, who also got fired. The way I remember it, Claire, you guys were founding SunEdison, and you were trying to scale the financing side of it. And I remember saying, "Here's the only tip you need. Go to BWI and try to rent a car." And I think Jigger said, "We don't need a car." And I said, "Well, just go get the form and then try to negotiate changes in the form." And one of you said, "Well, you can't change those forms." I said, "Exactly. That's what you need to do to scale your financing of the business. Have forms that cannot be changed. You won't sell as much, but you'll finance everything," which was the technique we were using to finance energy efficiency. I think we had just crossed $1 billion of energy efficiency financings for the U.S. government.
And that was in 2003, 2004, Jeff.
Yes.
I mean, you were definitely revolutionary at the time. So maybe for our listeners, you can just explain what Hannon Armstrong Sustainable Infrastructure, or HASI now, what you actually did and how you connected the capital markets with government.
Well, being unemployed at the time, Mike Hannon, who was the founder, took me to lunch with John Armstrong, and he said, "Look, Jeff, John and I are old. We don't work very hard, and we've made our money. You're young. You work like a dog, and by the way you're dressed, you clearly haven't made any money. Why don't you come back and start this thing up again? You did some clean energy stuff in the past when I was there in the 80s, and do it again." I said, "Well, the financing has changed. The one success of EnergyWorks was to figure out how to do multi-asset securitization across borders." Basically took that technique and brought it back to HASI because there was a growing pipeline of energy efficiency deals. On their own, they were average size of about $1 million, 25-year term, pile of papers that basically said the government may or may not pay you. Absolutely unfinanceable in any market. And we created a securitization platform called the Hanny May, which I now think has done about $5 billion of energy efficiency. But we would be able to aggregate all of these transactions and fund them quarterly. It allowed our clients, Johnson Controls, Siemens, Schneider, to know that if they developed a project, they were going to get financing. And I think that was the key that I'd learned the hard way at EnergyWorks was, unless you know you can get financing, don't develop it. Figure out the financing piece first, then go develop it, and then develop the heck out of it and do it exactly the same as often as possible.
Yep. And that hasn't changed, right? We at Sunrock talk to developers all the time. We are sort of the middlemen, the interpreters between the capital markets and smaller developers. We're talking 500 kilowatt projects,
Right.
things like that, but they don't know how to translate into the capital markets. And so we're sort of the intermediaries between those two. And that really hasn't changed. But for you, you were working with the Johnsons Controls and Amorescos of the world. They didn't have financing, and you brought in, was it John Hancock at the very beginning?
There were multiple parties. Hancock was a primary one. And FYI, Hassie announced earnings last week, record earnings, and over $4 billion of investment in 1 year, by far a record. So,
And what balance between efficiency projects and new renewable generation projects, just kind of roughly, would you say is in that mix?
it's about a third efficiency, a third behind the meter and grid connected renewables, and then quite a bit in what we call fuels, transport, and nature, renewable natural gas, electric buses. And one of the things I've learned the hard way in 40 years in this business is don't count on any one asset class to perform. Something's going to go wrong. So we have multiple asset classes that we invest in, and everybody says, when are, investors will say, well, what happens if you hit on all cylinders? Like, it'll never happen. Trust me. Something's going to go wrong. And it always does. But in 2025, Hassie had an outstanding year. And this is the second Trump administration where the company has performed quite well. That's not an
So I want to come
endorsement.
back to that, but I
That's
was
a
wondering if you
fact.
could just back up a bit, because
Sure.
in your early days, how much of the energy efficiency landscape did you need to educate clients about, and how much were clients coming to you saying, we think we can do this, but we need someone to put it together?
Yeah, I don't remember anybody ever calling me and saying, gosh, fix a problem for me. I actually started thinking about energy efficiency when I was 17. I read Diet for a Small Planet, and on page 78, there's a bar chart of BTUs per gram of protein from a cow, a pig, chicken, soybean, and I that bar chart just stuck with me, and I could never think about things without thinking about the efficiency. Now, there's no, when you get 2 degrees in public administration, there's no job openings for a non-technically trained person who has zero experience in this. So you got to go find a way to figure it out. And that's what I did. But I think 5 of the first 6 companies I worked for either blew up or I got fired. So it was, when people talk about career planning, it's like, I didn't have a career plan. I just wanted to get a job. But
I think kids don't understand that today. I think a lot of people don't understand that. I mean, I've been at several unsuccessful startups at this point, and I think, there's environmental science undergrad majors. There's all sorts of different like paths. But Jeff and Dan, all of us, when we were starting our careers, there wasn't this whole idea of energy and sustainability and climate tech. It didn't even exist, right, Jeff?
it was actually the twin Arab oil embargoes in the 70s that we were importing oil to generate power, and that looked like a really stupid idea when the Saudis raised the price, and it is a stupid idea. The decarbonization aspect didn't come until really for me when, like 95, when Hansen testified to Congress about CO2's impact on climate, and we actually
And that's Jim Hansen, former director of Goddard Space
NASA,
Science
yeah.
Lab and author of Storms of Our Grandchildren.
So it was always you had to make a job somehow. And when I came back to Hassie, I had focused on energy efficiency at that point, or decarbonization writ large, but solar wasn't a thing. Claire, I remember we took a bus ride out to a 7 megawatt solar farm that we helped you get tax equity for. And it was like 7 megawatts. This is
How do
big.
you do that? That was, I
Yeah,
think, Nellis Air Force Base, right, Jeff? Pretty sure it was that one.
could be.
Yeah, that was like '07-ish,
Could
and that
be.
was probably the nation's largest
Oh
solar
yeah,
installation.
for a minute it was. Um, and now, 7 megawatts is
We got some
trifling.
backyard 7 megawatt
Yeah,
systems.
yeah.
So I do want to say for the record, Jeff, you never invested in us on Edison. Jigger Shaw and I and Brian Robertson at the time came to your office, and you thought we were way too risky.
Well,
Uh-oh,
we
this
didn't
is
have any
this is
money.
fighting words here.
Clara, Hassie would started with $1,000 of paid in capital. we had no money. We were always good at arranging other people's money. So,
Exactly.
and I
Yeah.
had no money. So, you get fired a couple times, you don't really uh, accumulate anything. But I certainly wished I had.
Well, yeah, and then we all wish we had invested more in Hazy, right? I mean, the thing that I always was really respected about you, Jeff, when we met, we must have met in '03 or '04, is that you just came in and punched the clock every day, and you were talking to Amoresco and Johnson Controls
Yeah,
and all of these folks. They were putting together deals for school districts, for Air Force bases, for airports, but they didn't know how to get the financing. And you too were the translator between what they needed and the capital markets. And you did it really brilliantly. So you didn't have your own money, but you were able to transfer money and take a dev fee on the way,
that's
right?
right. That's right. Um, and the other thing I brought from the Energy Works and Wartilla experience was carbon really does matter. And we had a week, once we'd gone public, we had a week quarter, and we were looking at maybe doing a midstream natural gas project. And I said, oh, I don't want to do that. And as you know, in a public company earnings call, it's not open mic night, highly scripted. I blurted out, much to the CFO's discussed, that we were going to never invest in any assets that produce carbon, and we were going to report on the carbon impact of every project, because I think I have come to articulate the theme here as this was always going to be hard. Decarbonization was always going to be hard. And I look at it as a 100-year battle. I'm at year 50 of my battle at 67. It's going to be another 50 years. And you have to have a very long view that it's going to take time. We've made fantastic progress, and now we're kind of in the execution phase. But the fossil fuel companies are never going to go away. They're never going to give up. Utilities are never going to cede their territory. This was always going to be hard, but we're starting to win despite the Trump administration.
So let me unpack that in two ways, if you don't mind. So one is you said no carbon projects. You quickly said renewable natural gas before, but the thing that HASI produces that I look at all the time is the carbon count.
Hmm.
And did carbon count, meaning doing the accounting of carbon, come first or come second? My guess is it came second, but I'd love to know how you set it up, because that's something that we look at and use all the time to look at projects.
When ESG was starting to get some traction, I started to be horrified at what people thought environmental, social, and governance, and particularly the E part was, the naivete about how impactful things were. We would do an energy efficiency project that was $10 million that saved all the carbon in the boilers and the HVAC, and we'd put 3 panels on the front portico, and that was all anybody talked about. And it just the fundamental understanding of how you decarbonize a system was absolutely not there, and it became very obvious in ESG greenwashing. So I started writing my annual report letters attacking J.P. Morgan and Larry Fink and just saying this is nonsense.
Yeah, you've
Um,
made friends all over the place,
yeah,
Jeff. Yeah.
but if carbon counts, which it does, and capital is scarce, which it is, we ought to be making the most impactful investments. And that's the simple ratio that is exactly the same concept as Diet for a Small Planet bar chart. And the other thing that I'm very proud the company does is we report on all the assets that we invest in, not just the pretty ones that make for a good photo op.
And so I guess a hard question is, if you look back to the beginning there, how would you say your return on investment of efficiency and renewables have gone over time? I mean, just kind of broad picture, not a number, but that has shifted over time. How has it worked for you?
Both return about the same. It's not a lot of the efficiency assets we securitize, so we don't think of it as a return on equity. A lot of the renewables we put on the balance sheet, and it is return on equity. The mix of the two makes for a very strong business in that you Solar can go up and down. And Clary, you know how tax credits used to come and go, and now they're gone. Wind PTC was always up or down. You didn't want to count on anything. So it's the focus. I always call solar and wind a means to an end. The end is decarbonization, and carbon is everywhere, as you know, Dan. And it can be in food systems, regenerative ag, and it's incumbent on people in the industry just to go find where you can make a margin by decarbonizing. Is it in green cement? That might be. Starting to see some promising things there. Don't fall in love with any of the technology. Always calculate the carbon and the cost of it. And
You
that will
make it
keep
sound
you.
so logical and so natural, which
I
is,
thought it was.
this is very California speak, Jeff. But you've been doing it this coast. So this has to be an area where you and Claire have felt like you were swimming upstream at different points.
Um, how so, Dan?
Well, I mean, this has not always been the language. I mean, you're speaking Californianese right now.
Oh, Uh, yeah, and people ask me how many other people use carbon count, and I say exactly zero, and I'm baffled by it.
Well, I
Uh,
use it, so
okay,
not zero.
good, good. That's two then. Uh, but no, I think that it is. We are very much swimming upstream. It is a challenge, and but it's actually not hard intellectually. You got to think about carbon and thermodynamics, and
Well, getting the returns is hard. And I mean, I'm going to push back a little on you, Jeff, in the sense that, nobody thinks energy efficiency is interesting, right? And particularly commercial investors, right? Like our commercial real estate owners, they would much rather spend money on a fancy new lobby than their new HVAC systems. And historically, over much of the United States, utility rates have been low enough that it made much more sense to do that, right? I'm on a flashy whatever as opposed to upgrading my HVAC systems. But you've been focused on the government sector for much of Hannon's career, right? Because there have been requirements associated with that. I remember working for Secretary Chu during the Obama administration, and he used to say energy efficiency isn't low-hanging fruit, it's fruit on the ground. I mean, why do you think that still there's so many incredibly energy inefficient buildings right now if it makes so much sense and utility rates have gone up so much?
um, the contractual structure isn't there in most places. And people talk about low-hanging fruit. It's like, okay, you've never picked grapes. It hurts your back. It's low-hanging fruit, but hard to do because it's small and hard to understand. But I'm projecting a renaissance in energy efficiency. Probably needs a new name, and precisely because rates are now high. You could ignore waste, but I think with AI data centers putting stress on utility pricing and just the amount of investment that has to go into transmission distribution networks, utility prices are going to be unaffordable. People will have to, whether it's commercial built environment or residential, have to start using new technology that makes for a better user experience to try to find a better name than energy efficiency.
But I want to ask though. I mean, and we were working on this in 2008. I mean, you have Hannon Armstrong or HASI has focused on the government sector. Why do you think commercial building owners still are not paying attention to it?
I think they are. New buildings are certainly much more efficient than old buildings. I think LEED certification led people down the wrong path. You
Ooh,
get
tell us more.
you get a platinum for LEED certification, and because you got 3 points for putting a bike rack out front.
Right, of
Okay,
course. Okay.
great. But what about your HVAC system where 90% of your energy bill is? Again, LEED doesn't have a carbon count component to it. It's good, but it's not as good as it should be or can be.
Right, right. And yet you still see, of course, new buildings, as you're saying, have new standards. And depending on the state you're in, you're required to put in solar or have your rooftop be solar ready. Um, but there's still commercial buildings all over the country that look like crap that have old HVAC systems and, nobody's doing anything about it. Why is that?
Um, I don't really know, Claire. That's a damn good question.
You're supposed to say because they haven't come to HASI for business
No.
assessments
Okay,
yet, right?
so the commercial office building problem got solved by Cisco DeVries with his PACE, Property Assessed Clean Energy, and we became very big fans of PACE and started to invest in it, hundreds of millions of dollars. And then the big insurance companies like Nuveen got into it and changed the mortgage rules so that they could do $1 million PACE loan and $100 million first mortgage and call the entire thing green. I used the carbon count on our investments and said, oh, wait a minute, we're just building to code. All we're doing is taking out higher cost mezzanine capital. This is now greenwashing, and we exited the PACE business. PACE is the right solution, but it's now gone to the point where it's just building the code and become greenwashing.
Yeah, and it's PACE is so interesting because I don't know if you know this, Jeff, but Dan was very involved with Cisco DeVries when he at Cisco's time at Berkeley.
Mm-hmm.
And I thought PACE was so cool in 2015 and 2016, and I completely bombed on trying to develop a company in the Mid-Atlantic on PACE because every rule in every jurisdiction's a little bit different and how the tax rules work. And I had got some legislation passed in Baltimore City, and it was just too complicated to sell
Yeah,
to these commercial building
yeah,
owners.
yeah.
And that's actually why I do think PACE is the natural idea, but it does matter locally. And so it did well in certain markets, residential versus commercial. But yeah, and it was fun. Started out of the mayor of Berkeley's office, where we foolishly called PACE Berkeley first until Jeff Tannenbaum in New York said, you're not going to sell a product on the East Coast called Berkeley first. And
Right.
so it evolved. So
Well, and for our listeners, can you just explain what PACE is? One of you.
Go ahead, Dan.
So I would say PACE is simply giving a loan in front of the mortgage for energy efficiency and renewables, but you can't jump to renewables. You have to do efficiency first. You can stop there or you can do both. And the versions for commercial customers and residential in the pure version of PACE, property assessed clean energy, are a little bit different.
Well, and then as Jeff is saying, the insurance companies have sort of bastardized it and have taken advantage of it in new ways. Right. So what's the next step with that? We have to think of a new thing.
Higher prices.
Yeah. Higher prices.
Higher prices will provoke action.
But Jeff, let me ask you to kind of wrap us up with the discussion. You mentioned Trump 1 and you mentioned Trump 2 and that you've done well in your 2025 returns. Going forward, what do you see as kind of I don't want to say low-hanging fruit, high-hanging fruit on the ground, but what do you see? Because you clearly articulated that it's the package of low carbon, zero carbon investments that you strive for, not one sector over another. What do you see coming up for the next 2 years as likely, the big efforts on HASI's side?
I'm going to answer that slightly differently.
Good.
Our investment thesis is that in a world increasingly defined by climate change, we'll make better risk-adjusted returns investing on the right side of the climate change line. And it's based in physics, statistics, and economics. Physics being the second law of thermodynamics. It's a very long investment thesis, but that's where I guess having another 50-year horizon for this is the proper focus for me. Clean energy will win, low carbon energy will win, not because of its inherent goodness, but because it's economic. If externalities were actually included, it is such an incredibly great bargain. But they're not. Tax credits were a proxy for the negative externality offsetting it. But right now, solar, wind, energy efficiency, batteries are the most economic solutions. We will always have fossil fuel in the power grid. I've never ever once uttered fossil fuel free. There are diminishing marginal returns in every asset class, and combustion turbines with for a few hours a year or a few minutes a day cannot be replaced. And then when you do the carbon calculation, they shouldn't be. It's not that much carbon.
And you highlighted renewable natural gas too. So you're already looking
Yes.
At a sustainable path, even for those few hours a day or a
What's
year.
renewable natural gas for our listeners?
Methane from a landfill or methane from animal feedlots, cows, but largely from landfills. And it is a much, much bigger business than I understood it to be. And Hassie's really doing quite a nice job finding the very best developers and owner operators in that business and putting capital in there.
I mean, Jeff, you make this sound so logical. I mean, this is music to, my Western US ears. It's so exciting to hear this as, well, this is just the logical way to do business. And I just wish more legislators and more companies would say, I hear this. I know that's what's going on. I want to be part of accelerating that path, but that is not the current headwinds.
It's not the incentive structure. It's not the way that utilities are designed. Utilities are designed to sell kilowatt hours. They don't want somebody else selling their employee or their customers kilowatt hours. And frankly, PJM is not incented. The regional transmission operators are not incented that way, right?
It was always going to be hard. It's going to continue to be hard, but the trajectory is clear. Will we get to 1.5 degrees C? I actually never thought we would, and I don't think we will. But climate mitigation, yes, it's definitely the right goal. And public policy, there isn't enough money in government to subsidize clean energy. It has to be economic on its own. I think the amount of innovation that's going to come to reduce the costs in solar, wind, and energy efficiency, we're just getting started, this
I
industry.
totally agree. It's a very exciting time to be in the industry, and it's also a very scary time because of so many different government policies that are coming in. But as you say, Jeff, the economics will prevail, right?
Absolutely.
Jeff, we want to thank you for joining us. This is cool. I'd love to have you back to hear how your returns are next year. So maybe
All right.
we have a early 2027 return date to catch up on this as well, if you're willing.
Yeah. Thank you so much, Jeff.
Thank you
for
both.
joining us at Energy Matters with Claire and Dan. See you next time.